Good morning, everyone, and welcome to the European crossover webinar. And we've seen a continued sell-off here in equities, and right now we're on the FX page, but we'll get to that. We do have some Italian data that generally will be released at the top of the hour, but it's very low tier down slash flash trade balance, non-EU Italian data has not come out yet. And then in about a couple hours, we'll get UK CPI distributive trades, relatively quiet. And then at 7 a.m., Mexican retail sales. We don't really hit any specific news until we get into the States at 8:30 Eastern. Once again, I'm on Central Time, so it's 7:30. But 8:30 Eastern, we'll get durable goods. And we'll also get final GDP sales for Q1. I'm not sure how much of that impact that's going to be because, once again, it's final. It's Q1. We're coming into the end of Q2. Then we do have advanced good trades balances also at 8:30, along with retail inventories and initial jobless claims. So quite a bit of news coming that's going to be hitting at 8:30 Eastern. Just to recap, once again, it's going to be durable goods as well as final Q1 GDP sales, advanced good trades balances, wholesale inventories, and obviously retail inventories, and initial jobless claims. That will be a key one, is on initial jobless claims, certainly going to be likely a market mover. And then at 11 a.m. Eastern, on a very low tier data, we do have KC, Kansas City Fed manufacturing data. Nothing out yet that I see here for Italian flash trade balances out yet. Haven't heard anything over the squawk either yet. They just said possibly would be out at the top of the hour. So maybe it's one of those reports that comes a little bit later. And you can see the pretty good sell-off we had here in the euro. Taking also a look here on the cable, well, actually the 6B, which is a okay, just some news from the ECB for the euro assistance, a new backstop program we've set up. Not having any direct impact here with the euro. But as I mentioned before, is we've seen some pretty good falls here in not only the euro, excuse me, obviously here with cable with the 6B, and then of course here with the euro also. We've come off quite a bit. Obviously, a lot of this impact has had to do with the moves that we've seen here with equities, and we'll take a look at that. And you can see the slide that we had here with the S&Ps. Take a look here. Boy, what a slide it has been too. Look at that. We've even come down here to come down to about 3,005. This here. Taking a look, moving on over here to the 2-hour chart to get a little bit better perspective. But you can see it has been quite the slide. We could also go on and throw a quick fib on there to see where we stand. But we have gone and made a run down here at 3,000. Potentially, we could even dip. You would think that they may try and go after the sooner than later. Go after the the stops just below 3,000, and that would take us down here to 29.91. Even probably just a hair bit lower. We have some support there, but potentially as low as right there, which would be 29.89. 29.89. But quite the fall that we've had. We did come down here into this 3,016, which would be a support area here, but we knifed right through that as we took it all the way down here to 3,005, as you can see here. Taking a look at the Dow Futures, you can see the same thing. We've made a pretty good run down here, challenging right here at the 25,000 mark in that general area. And take a look at NASDAQ. Still relatively strong. Look at that. Still relatively strong. And we'll go on and take a look at the news rather quickly. So safety bid drives the dollar up as U.S. coronavirus surge dim quick recovery hopes. The dollar held the upper hand on Thursday as an increase in coronavirus cases in the United States and fresh trade tensions undermined hopes for a quick global recovery and prompted investors to trim bets on riskier currencies. The dollar index is against the basket of currencies advanced 0.1% to 97.27. New daily U.S. Virus cases surged to nearly 36,000 in the latest tally, nearly a record of 36,426 hit in late April. The governors of New York, New Jersey, and Connecticut ordered travelers from 9 other U.S. states to quarantine for 14 days on arrival as COVID-19 showed signs of surging in the southern and western parts of the country. The market is getting worried that it's just not a temporary spike. Things could actually be getting worse, and with the U.S. behind the world's largest economy, any further economic shutdowns would take serious repercussions, said Bart Wakabayashi. In California, which has seen sharp rises in the new cases in the past few days, Disney Parks said it will delay reopenings on theme parks and resort hotels. While some investors expect the economic impact from second wave infections could be smaller than the first one, others worry that policymakers might fail to respond forcefully and risk further economic damage. Also sounding the mood was news that Washington is considering changing tariff rates for various European products as part of the trading partners' aircraft dispute. The risk averse is supporting the dollar. After markets have priced in the positive news about economic recovery, we are seeing the news about the second wave, said Shinichiro Kadota. Commodity currencies, which have been supported by the rally in oil and commodity prices, have also taken a hit. The Aussie dipped slightly to a 68.59 after losing 9/10 the previous day, while the Canadian dollar dropped to 36.42 to the dollar, not helped by Fitch's downgrade of Canada's sovereign rating. And let's take a look to see if they have anything out yet on the morning bid. And I'm not seeing anything here. But we know, as I said, that equities across the board have taken a pretty good hit. Speaking of which, we can also just, we'll get to that. I was just going to take a quick look at crude oil. Not that I give very much attention to that market. It just seems just such a manipulated market. I guess you can say the same thing about equities, but that market just, and let's take a look here. Actually, I have it on the equities page. I don't even pay that much attention to it. Really, the move yesterday had nothing to do with anything in crude oil. So once again, I don't pay much attention to that market. When it falls, it's because it did fall. Look, like I said, just up, 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 no matter what. Just more news out of the Mideast and or out of OPEC. So now it falls. Well, I don't think it's that big of a deal. I mean, yes, it came off some, but honestly, like I said, it just almost like helium, uh, and you to me, I think it's very difficult to even trade this kind of market. Look at that, just up, up, slightly up. Look at that, and then once again, it's just like a one-way train. You see what I'm saying? Right here. Then a quick dip, consolidation more higher. Finally, and even if you look here, there really wasn't a real breakdown until you got down to here. So you're talking about almost $2 before you can say, okay, now we're starting to see a sustained break. So once again, had nothing to do with what's going on with equities. Actually, it's reflecting what had gone on equities and not the other way around. But once again, like I said, and it looks like we're getting a little bit of a boost here now with S&Ps at 30.26, 20 off of those lows. And we're seeing this reflected here with the euro. The euro's making a nice run up here too, which had been trading relatively close. We mentioned about it yesterday with the way that the S&Ps were trading. I almost said, like I said, hey, you don't even need analysis. Just go in and just look at the S&Ps, which we saw that now. That being said, the euro took a pretty good dip, but it could have been even worse. And to be quite honest with you, considering the move we've seen in equities, the dollar index isn't even up that much. And to me, I think that has more to do with the issue that the U.S. is dealing with the coronavirus scare. And really, I think you're not seeing as quite a dramatic safe haven move into the dollar because of that, because this is where the whole issue is. So, probably, like I said, quick to probably see a nice little rebound here in the euro, and to a certain extent here with the cable, or I should say it's 6B. So let's go on in. Bear with me. Yeah, Mark is finna look at the Dow. Once again, like I said, I really don't pay attention to the Dow, Mark. I'll be glad to take a look at it. It's just, once again, I found that, one moment, let me take a look at that. These are just general levels because, like I said, for the type of trade I do, and the only reason I was following so many of those, I've even have right here with the Russell too. I just like better focusing on the markets that I'm actually in there, which is the SPOOs. And then I've also inputted the Dow, the euro, and the 6B offers me a nice little differentiation between those. But once again, like I said, we'll take a look at the Dow. I only have the Dow on the 2-hour chart. So we'll take a look at the as far as the fib move. So 24,906 would be the 78%. Let's take a look here. We've already come down here to, oh, you can see that right there. We hit right there on that level, a previous high, which they used for support. Look at that right here. Tagged it right there, which is just about 24,986. The only thing you can advise is that we're pretty oversold. If you look at this on a on a 30-minute, right there would be resistance, 25,928. I mean, 25,298, essentially 25,300. Initial resistance right there is coming in right there, 25,221. You can see we just made that run of a period of 25,221. If you're looking at and then comparing it to see if there's something similar on the S&Ps, let's take a look to see if you have some kind of confluence where they're both running into some resistance. I'm just going to look at here from 30.55 so you can take a fib from here. So we're at the 50% mark. So if you look here, we're just about there at that 50% mark. The SPOOs have made it, and this is that rebound area. So 50% mark, you're going to run into some resistance right there, 25,234. And we've already made a run almost there. Anyway, you can see that the high was 25,230. So we just about nicked the 50%. So you see the market probably pair look back a little bit. Look at the as a piece here. But once again, we're so oversold that my guess is we'd be able to push, just even if we put pair back, we'd be able to push back and make one more little high, and you see a little bit more volume, probably at 246 if they make one more, and then the market can pause a little bit. Once again, we're just very oversold. That's all you can say, is we're just very oversold. We did come pretty close to this level here. $24,986. And then if you look at it, the SPOOs are just tagged same day VWAP. Remember, I just told you right now we're doing that right now. I told you we can just push. I would think we push a little bit higher. So we go back to the 5 minute as I was showing you. And I said, think we can, you see right here, we put that high. I think we can push up a little bit high. I look for probably like right around this area here, which is 25,264. There's some pretty good volume. I mean, you can see coming across the board there. So, and you're seeing it here in the SPOOs too. You see here? So, once again, trying to make a comparison. If you stretch it, and I'm saying going a little bit of stretch, that would get us to 30.38. So, probably gets us to around, potentially to here, 25,291. Right around there, 25,291. Hope that suffices. But once again, these are very, very short-term levels because, as I mentioned, we're just extremely oversold. But if you're looking for a market, if you're looking for an area where they'll probably take a pause, is right around that 25,300, which I've got a marking here, 25,291. And you can see here the SPOOs. And that's, again, a little bit of a stretch because you can see here there's some decent volume coming in at 34. So once again, this is the lower portion here. If we stretched it, we could get 38. But really at this 34, not a bad area right there. Anyway, let's go and move into the analysis. Okay, good. We do have the morning bid. Okay, well, we'll keep this here, and you can keep an eye on this Dow Futures. Remember I said 25,300. It's 25,291. And you can see here the spoofs. You see here, we're making that move here. So I would think that we'll run out of gas around 30.38, and that may get your Dow futures up to around 25,291. We'll switch this to a 30-minute for a little bit closer look. And there you go. We're almost at the 25,291. There you go, 25,297. You see that coming right across here? Yeah, we just hit it. We just hit it. There we go. And look at the SPOOs at 38. So this is about where I would expect us to maybe take a pause. And a little bit of decent volume in here. There's your 25,294 now. Looks like we've got right up here is 294. 296 was the high so far. So I would expect this to take a little bit of a pause there. And we finally hit the 30.38, which I said I thought it was a little bit of a stretch. Maybe they can goose it a little bit higher and take this one out if they clip some stops at 30.42. But this is an area for a pause. No big volume yet. We have tripped a little bit of volume, but nothing remarkable at this point. But anywhere in here, this whole area, look, we're just above 300 now. So pretty much got it stretched here. See whether we can trip some stops. They're goosing some stops. People may have gotten a little bit too short here. Push them a little bit further. I'll try and move this over here so you can pay more attention. But once again, we have reached that level. So an area where I would think that they take a little bit of a pause. And we're seeing right here with the SPOOs. Go this home. Pretty good little run so far. Morning bid, relapse, or reset. First, Canada becomes a first country to lose its AAA rating as a result of the coronavirus-fueled government spending surge. When Fitch downgraded it last night, Disneyland, it's delaying its scheduled July 17th opening and hasn't yet set a new date so far. The U.S. said it would impose tariffs on a wide range of European goods. Soon, some U.S. regions are imposing travel restrictions on states. This morning, world stocks are down for a second day. Asian stocks posted their biggest drop in 8 days, and U.S. stock futures are down a half-tenth after all three U.S. indexes closed in the red. The morning world stocks are down for a second day. The IMF predicted world growth would shrink 4.9%, and has cut its U.S. forecast by 2 percentage points, now expecting it will shrink 8%. The VIX volatility index posted its biggest rise since January the 11th. Renewed worries have seen the U.S. 2 to 10-year yield curve flattening 20 basis points since mid-June to around 48 basis points. Currency markets look moribund with the dollar just above flat and the Canadian dollar to 10-day low against the greenback following the downgrade. And that's about it. Nothing of any real significance. So with that, we'll go and move into the analysis. And you can see we've made it up here, right up here, the 25,311. I thought we'd get about as high as maybe 25,294-ish. So we've gotten a little bit above that. We're a bit stretched, but you can see here in the SPOs. So I hope that helped you out. Let's go and get into the analysis. So the euro posted a bearish engulfing bar as U.S. equities fell on increasing negative COVID news. Support will be 1220, and the lowest today's been, oh, not bad, 1222. Support will be 1220 with resistance at 1295. Let's go move into the cable. So cable finished lower, nearly challenging the 24 even area. Support will be 2379 with resistance at 2482. And moving on to the Aussie. So the Aussie closed lower on Wednesday, but above Tuesday's lows. Support on Thursday will be 68.05 with resistance at 69.28. And moving on to the Kiwi. The Kiwi closed lower amid the backdrop of weaker equities. Support on Thursday will be 63.62 with resistance at 64.76. So the dollar CAD finished strong on the day, helped by a downgrade for Canada. Resistance will be 36.76 with support at 35.65. So we almost got there. So 36.76. And support will be 35.65. Onto the peso. The dollar peso finished at 4-day highs. Resistance on Thursday will be 23.02 with support at 22.48. Onto the dollar yen. The dollar yen finished with a bullish engulfing bar. Finished with a bullish engulfing bar. Resistance will be 736 with support at 662. And let's go into the cash dollar index. So the dollar index finished with a respectable solid day, although not dramatic. And certainly you would expect that a big move all the way up to here, considering the sell-off that we saw yesterday. And if not, even more bigger sell-off, at least taking out these highs with the move down to 3,005. We're not seeing it. And I think, once again, I think that has to do with a lot of this is dealing with the U.S. in itself. So why would it have such a big gain? And also, not to mention, other countries have done even far better, even if you don't look at that portion, as they've come out of recovery. So they're in a better position. So although not dramatic, U.S.'s issue with COVID may be limiting gains despite the sell-off in equities. Resistance will be 97.44 with support at 96.87. And let's go and move into the cross rates. Well, no moves here, no changes here with the Kiwi yen. We're just stuck in the mud. So no changes, that will remain the same. Move on to the euro yen. Wow, obviously no changes in the euro yen here. Look at this. Wow, we are just not going anywhere. Although we did see a a pretty dramatic move in the dollar yen, but look at the euro yen. We are just not going anywhere. So obviously no changes here with the euro yen either. 1992 for support, 2065 on the upside. On to the euro odd. Wow, we are just not going anywhere. Look at this. This is just, look at that. Nothing here. So no changes in the euro odd either. Wider ranges, but we have to get above that or below to get any kind of follow through, which is going to take us now to the euro Kiwi. We had 74.38, which that will still remain support. 74.38, and then on the upside, 75.96. So there's no changes here with the euro Kiwi. We got a little bit better close yesterday, but we haven't been able to break above. You can see here 75.96. We got up to 75, looks like 81-ish. So we haven't taken that out yet. And right now we're at 74.62 and support of 74.38. So these pairs, some of these pairs, these cross rates are just not even moving. And it looks like we're suffering from the same thing here in the Aussie yen. It's interesting that these cross rates are simply, for the most part, not moving. $73.32 on the downside and $74.02 on the upside. Yesterday we did get up as high as $74.15, but we're still bracketed within this tight range. We are just simply not even moving on these cross rates. And let's go on. And on to the guppy. On the upside, we have 34.28 Not challenging that. And on the downside, 32.54 right now. The low is 32.79, and yesterday's low was 32.68, and so we still have 32.54. And on the upside, 34.28. High yesterday was 33.63. So we're just trapped in a tight range. And we'll wrap it up with sterling odd. Same thing here. Look at this. This is probably the tightest day that we've seen almost ever. Look at this. If you look at this range, compare that. Look at this. I don't think you've never seen a tighter range than that. Look at that. Let's go back. It's even tighter than this range here. So this is the tightest range I see. It's even tighter than this right now. So it's the tightest range. The closest would be here. So it's the tightest range since January. That's the starting out. We're just simply not going anywhere. The tightest range since January 21st. About a 50-pip range. So on the down, up here, 80.89. The high we've had so far is 81.28. So we have expanded it just a bit. Resistance would come in at this high there, which can be 81.78. Support's going to be right there. Below that, 79.85. And that will conclude that. We can take a quick look. Mark's asking if the bias for the odd is still bullish. Well, you're just going with where it stands. You see what I'm saying here? Why is that? Why would that be considered bearish? It's not. It's still going to be bullish. I mean, look at this. That's not bearish. Now, we do focus on a shorter term moves, but look, you haven't even broken this area. You haven't even broken this area here. So you haven't broken this low here. You'd have to break this area here at 68.07 to now go and start to turn it bearish. You see, just there. This is still bullish. I mean, you can't, there's no denying. Look at this day, and one of the things I was even surprised, despite the move we had in equities, we could even take out even this basic level here. We're just now challenging it, and that's after yesterday. And then if you consider today, and we've been down to 3,005 in S&Ps, we should have already been down at least down to here. We should have already taken the stops down here. So it's not bearish at all. Not bearish whatsoever. But yeah, when will it turn bearish? When it takes out this level here and closes. It'll have to take out this level and close below it to start to turn it at that point. We'll take a look at a closer focus on the 6E, which is the Euro futures, and the 6B, which is the cable. So let's take a look. on a 2 hour. Had a pretty good fallback on the euro. Let's take a look where we stand. So we've already taken out the 61%. 2306 would be the 78%. But we've already gone down to 3005 in the SPOOs, and where you would have thought that the dollar would have really taken off, and it hasn't. It's 1230. Now the euro spot is trading at 1235, and the euro futures are trading at 1255. So it's just a 20 pip or 20 pip difference. So you can equate that. If we look for some further support, right there, we're trying to make a stand here. 1253, which would equate to 1233 in spot. Good little support there, right there at that 1235. So maybe one more little dip down here, and you know basically what your risk is if you're looking to get long down there. Then taking a look at it on the 30-minute. So what we're seeing here is just some volume coming right there. So on the 30-minute, a lot of good volume coming in right in this area, which is going to be close to that same 1235, 1233. You can see here it's been on a sell signal, but more importantly, look how well it's ridden it down here. We made a challenge up here to 1270. You can see right there. And that's also had the slower exponential moving average there. If we look, we did make a couple of challenges to same-day VWAP, but they're not holding it, and two-day VWAP is way the heck up here. SPOO's now at 30.45, 30.46, so they're making another run back up here. But we're not getting any lift out of the euro at the moment, even though SPOOs are making that further run. And then looking at the cable, we can see we were in on a gas at two-day VWAP. But surprisingly, even though S&Ps are on their highs right now, we're not getting any move out of the euro here. And we'll wrap up real quick, just taking a look at the indices. See here, look at the SPOOs. Now look here, we're even pushing up a little bit higher here in Dow Futures. Looking at the SPOs, we already made it. We got a grip above same day VWAP. You can see how that was holding the market. So pushing up higher. 2-day VWAP would be like at 30.57, and resistance right there about 30.54. Now, if you want to consider this a bit of a rebound here, we'll really have to go with, let's see here. Worry about 30. Okay, 30.58. Well, essentially 30.59 would be the 38% back on this move. 30.59. So it gives them an area target to go with. 30.59 would be the 38%, and you'd be confluence in here with 2-day VWAP. If you want to look at Dow Futures, $25,500 would be the well, essentially 25.4096, but 25.496 would give you the 38% back and come right into this resistance. And the SPOs you can see here, 30.59 would take us to 38% back, and you'd also be tagging against a 2-day VWAP. So that's all we have. Thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.